Shruti and Iraj, and you're watching Tax Talks, where we break down tax concepts and discuss their implications ahead of Budget 2025. Today, we'll talk about the new and the old tax regimes, what they mean, how they work, and the potential changes that could be coming. Joining us is Alok Aggarwal. Alok is partner at Deloitte India. Thank you for joining us, Alok.
Thanks, Shruti.
So let's start with the basics. What are the key differences between the old and the new tax regimes?
The new tax regime was introduced a few years ago with the objective of having a simpler system without exemptions and deductions. And it would offer a lower tax burden on the individual taxpayer. So that was the intention, that it would be easier for taxpayers and easier for the revenue authorities from an administrative standpoint. Now, over the years, what the government has done, Shruti, is to make the new tax regime more attractive, because there were a number of taxpayers who were enjoying a decent amount of exemptions and deductions under the old regime, and they did not find it useful to move to the new regime, and therefore the government has introduced a few exemptions and deductions under the new tax regime as well. So, for example, in the last budget announced by the Honorable FM in 2024, after the new government took over, they increased the standard deduction to 75,000 rupees under the new tax regime for salaried taxpayers, and they have also allowed a deduction of up to 14% of salary for employer contributions to NPS. So these are some of the attractive exemptions, deductions available under the new regime in order to incentivize taxpayers to move from the old to the new regime.
Okay.
So let's say the more popular exemptions like HRA, House Rent Allowance Exemption, which is a very important exemption enjoyed by taxpayers under the old tax regime for several years, especially when you have salaried employees, now moving within India to take up jobs, and therefore they are paying rent in their location of their new location where they are employed. The HRA exemption is an important exemption under the old regime to enable them to, have a reasonable tax burden, and that is one thing which is still not available under the new tax regime.
Okay. And how do you think taxpayers could figure out which tax regime, could work better for them?
If we have to look at a broad ballpark number, right, that how do I keep it simple, then let's say if we include all exemptions and deductions, including the standard deduction, and if my total exceeds 4,83,000 rupees, 4,83,000 roughly, that is when I will always be better under the old regime, because I still have my standard deduction and I have the other deductions and exemptions. So once I hit that 4,83,000, assuming I have those kind of exemptions, deductions, I will definitely not be worse off under the old regime. So it may not make sense for such a taxpayer, if he has those kind of exemptions, deductions, to move to the new regime. And this is where we believe that the government may consider some further changes to sweeten the deal under the new regime.
So moving forward, the new regime has lower tax rates but fewer benefits. Why is that, and who do you think gains the most from it?
Yes, so as I mentioned, the taxpayers at the lower end of the spectrum and at the very high end of the spectrum gains from the new tax regime. For those who have spent a few years working, their income levels are reasonably higher. They are getting HRA exemption. They are making investments and enjoying the ATC deduction, and therefore their total of those exemptions deductions would exceed 4,83,000. They would be better under the old regime, Shriti. So that's the way we can look at it. And of course, one needs to always, sorry, just to add, one needs to always calculate it carefully at the beginning of the year and at the end of the year, so that one is making an informed decision on the final liability, because sometimes the situation may change. I may plan to make some investments, let's say, which I will get the ATC deduction. I may plan to give rent receipts to my employer to get the HRA exemption, but I may end up missing those, and then I realize that I may be actually better off in the new regime. So one needs to do this exercise at the beginning of the year and at the end of the year. And also, one needs to remember that if my intention is to claim the benefits of these exemptions and deductions, which are only under the old regime, then I should be submitting the relevant declaration to my employer at the beginning of the year that I want to be under the old regime, because now the default is the new regime. So if I do not make that declaration to the employer, then the employer will withhold TDS from my salary based on the rates in the new regime, without considering any exemptions, deductions other than, let's say, standard deduction and NPS that we spoke about. So I have to ensure that I keep this in top of my mind at the beginning of the year, and then at the end of the year when I'm filing my tax return. Because let's say I did not inform my employer has withheld TDS under the new regime at a higher rate, but I do have HRA exemption, I do have deductions, and my liability is actually lower under the old regime, in which case I can then claim a refund by making that election in my tax return that I want to be taxed under the old regime, and then claim a refund of the excess TDS which was done from my salary.
So the ITR filing process has been simplified over time, but is there anything else that could, make it easier, I would say?
There are a few basic things which could be considered by the government. One is, for example, the tax return filing deadline itself. Because for an individual who has various sources of income, let's say I am a salary taxpayer with house rental income from my property. I have capital gains from, let's say, shares and from property. I've sold some property as well. I have capital gains from property. And let's say I have some dividends, interest. Now, this is a typical situation with, let's say, the middle class salary taxpayers who have maybe been working for 15-20 years of their career, and they have accumulated some savings and made some investments in property and other things. Now, for these kind of taxpayers, to collate this data in a short span of time after the year end, after they get their Form 16, they look at the tax credits, TDS credits that are appearing on their AIS, TIS statements, which are now available on the portal. Sometimes I may even have TCS credits to claim, because I may have traveled overseas and there is tax collection at source. That's something, again, I don't want to miss out on. So for these kind of reasons, the window between April 1st and 31st July, which is currently there to file my tax return, is very short. So the government should consider extending that deadline maybe to 31st August for taxpayers who have these kind of income sources.
So with the budget just around the corner, what's the one key change or reform you hope to see this year? We already have discussed many, but what's that one change that you hope?
The government needs to continue supporting the economy through collecting good tax revenue, and individual taxpayers are the main source of tax collections for the government, as we have seen from the last few years. Not only is the personal tax collections larger than the corporate tax collections, but it is also growing at a faster rate in the last few years. So the government will have a challenge in giving too many SOPs to the individual taxpayers because that may impact their overall tax collections. But having said that, given that the salary taxpayers have a burden in terms of a good amount of taxes being deducted from their salaries, they have increased cost of living, and they may not be getting very high increments and bonuses, let's say in the current softer economy conditions. The government would do well by providing some relief to, let's say, salary taxpayers under the new regime. They could also consider things like a deduction for maybe infrastructure bonds, which used to be there many years ago. And it also aligns well with the government's objective of promoting the infrastructure development in our country. So it would have a dual benefit of giving some relief to salary taxpayers in the new regime and achieve the larger objective of the economy development. That could be one. The other could be in terms of affordable housing. There is also a demand for some sort of clarity in taxation of electric cars for salaried taxpayers who have employer-provided cars. That has been one expectation for the last couple of years, where more and more individuals are now opting with the environment-friendly electric cars. So there are some of these which the government could consider, which does not really impact too much of their revenue collection as well, Shruti.
Let's hope to see these changes. Well, thank you, Alok, for sharing these valuable insights. We hope this helped our viewers understand better about tax regimes so that they could, make the perfect choice for themselves. So that's it for this episode of Tax Talks. Stay tuned as we bring you more insights and updates.
Thanks, Shruti. Nice to talk to you.